When it comes to accounting for your value-added tax, it is very important that you keep good records so that you can keep track of the VAT on your inputs as well as VAT on your outputs. In today's video, I'm going to share with you best practices when it comes to setting up a good system for accounting for your value-added tax. But before we get started, if you haven't subscribed already, subscribe to my channel by clicking the subscribe button. It's at the bottom, it's down here. Click subscribe. And for those that have already subscribed, a million thank yous for joining my channel. Now, let's get started. When your turnover exceeds 800,000, which is the minimum amount required for you to register for value-added tax, you also need to be very cautious with regards to how you keep your records. These records are your sales invoices as well as your purchase invoices. Remember, in the previous video, I described the invoice that is recognized by ZRA. It's very important for you to review the key features of a tax invoice that is recognized by ZRA, because when it comes to claiming your input VAT, you can only claim input VAT on tax invoices that are recognized and meet all the features that ZRA has indicated. And so the first best practice when it comes to setting up a good system for accounting for your value-added tax is to ensure that you keep good records of all your business transactions, both for your sales, on which you charge output VAT, as well as your purchases, on which you are charged or you pay input VAT. Now, for those that are really small, like if you just turned over 800,000 and you don't have an accounting system yet set up, I would encourage you to keep folders of all transactions in your business and divide them by, invoices, sales invoices on which you charged VAT and purchase invoices on which you paid VAT. So VATable invoices and non-VATable invoices. So keep these two separate folders for both your sales as well as your purchases. And when it comes to filing, it really doesn't matter the size of your business. Good filing is what determines what goes into a system. For those of you that are, big enough or can afford to set up an accounting system, this is where it becomes really useful for you to look at a system that is going to save you time when it comes to computing the VAT liability and also submitting the VAT return to ZRA. VAT is very big, and in a future video I am going to look at an actual example of how we submit a value-added tax return. So I'm just trying to lay the basics before we get to that. So if you've set up an accounting system to account for your value-added tax, you also need to ensure that that system complies with ZRA's requirements. In the past, there was a list of accounting packages that you would find in a PDF copy on the ZRA website. I tried to look for it recently, I didn't find it. However, the concept of these accounting packages is that the accounting package must have key features that ZRA is looking for. So whatever accounting package you are using, it is a requirement that you go to ZRA and ask them to review your accounting package and see if it complies with ZRA's requirement in terms of you issuing a tax invoice from that system. So there are systems that ZRA, as rightly said, are not in compliance with their requirements. For example, if an invoice is deleted or cancelled on the accounting system, it should not be reused. But there are accounting softwares where you can cancel an invoice or delete it, or you can edit the invoice. And ZRA does not want that. What ZRA wants is once an invoice is cancelled or deleted, it should not be reused. You should reissue a new invoice. And so when it comes to accounting packages, though there is a list of accounting packages, that should not scare you from going to ZRA and having them review a particular accounting system that you are using if you feel it meets the key features that ZRA is looking for. So once you've checked your accounting system with ZRA, you now need to set it up for value-added tax. Review the chart of accounts in your business and see specific items of your chart of accounts or specific items in your business transactions, your sales as well as expenses. As you go through your list of your different sales categories as well as expense categories, you need to think about what items are standard rated, that is 16%, what items are zero rated, what items are exempt. For example, I'll give an example of a bakery. So if you run a bakery, you sell bread, you also buy flour, maybe you also sell drinks. So the question you need to ask yourself is, I sell bread and probably I even sell cakes, right? Is the bread a standard rated product or not? Is the cake a standard rated product or not? Okay, there's a list of, there's an exemption order as well as a zero rating order, a schedule issued by the Ministry of Finance that you can find online. So look for that exemption rating order as well as zero rating order. You can find all the items that fall under exempt as well as those that fall under zero rating. When you look at, and if you are not sure, you can actually even call ZRA to find out whether your items are zero rated or standard rated or exempt. So very important that you actually do that. So as you go through your transactions, both for your sales and your expenses, you need to note down. So for example, the example I've just given, bread is a zero rated item. Okay. So you know that every time you sell bread, the type of tax you are going to choose is zero. Okay? And then the cakes, unfortunately, are not zero rated. They're actually standard rated. So when you sell a cake, you are going to choose the standard rate 16% for the cake. When it comes to your expenses, the flour that goes into making that bread, is it zero rated, exempt, or standard rated? Flour is actually zero rated. So when you buy flour, you expect your supplier to indicate a zero rate on the invoice for the flour. So if every business has their own different types of sales as well as expenses, and different rules apply. So you need to go and check all your items that make up your chart of accounts and what rating they have when it comes to VAT. Once you've looked at your chart of accounts, some accounting packages, once you create, VAT rates, these 3 VAT rates, standard rated, exempt, and zero rated, every time you issue a tax invoice, it's going to automatically pick a rating depending on how you've set up your chart of accounts. So for example, if I'm selling bread, okay, and I set the tax rate as zero rated for bread, every time I issue an invoice for my client, it's going to pick 0%. If I sell a cake, every time I sell the cake, as long as I issue a tax invoice, it's going to pick the standard rate 16%. So when setting up a good accounting system, always think about the tax rate that applies to every particular item of your business. All right. And when it comes to your inputs, which is your purchases, you need to be very careful with value-added tax on your inputs, because VAT on your inputs goes to reducing your VAT liability. If you look at the VAT equation, VAT is computed as, output VAT less input VAT gives you the VAT liability, or the amount due or claimable from ZRA. So if your business naturally has a VAT liability or VAT due to ZRA, the best way to reduce that VAT liability is by keeping good records of your input or your purchases. So when you are in business, always work with VAT registered businesses. As long as you are registered for VAT, this is a key requirement. Don't buy your inputs from non-VAT registered suppliers, because that is actually just going to increase your VAT liability. Okay, because whereas you will have to charge VAT on your sales, if you bought a product from a non-VAT registered supplier, you cannot claim that VAT. So as a result, you end up paying ZRA more than you should have. You could have claimed a reduction in VAT through your inputs. So the purchases are extremely important for you to keep an eye on when it comes to value-added tax. So always work with suppliers that are registered for VAT and get their tip-ins. In fact, as you're going to see when we start submitting the VAT return, you cannot submit a VAT return without knowing the tip-in of your supplier. So always get the tip-ins of your supplier. A well set up accounting system has all the tip-ins for their suppliers, even their customers. All right, so for those of us that are in business and would love to set up a good accounting package, whatever package you use, they are in number. You can contact me. Actually, I love to set up accounting systems for businesses. So if you've got an accounting package and you're not really sure how it was set up, you can contact me. You can email me, mukonki@insidepartnersafrica.com, and I am going to give you specific advice with regards to setting up a good accounting system that accounts for your VAT correctly and that helps you actually reduce your VAT liability, because you are taking into account all your deductions when it comes to input VAT. A properly set up accounting system is also supposed to have a VAT control account. The VAT control account is an account on your accounting system, which is part of your chart of accounts, which allows you to actually account for VAT. Anytime you charge VAT on your sales, that portion of value added tax goes to the VAT control account. Every time you incur an expense, whether it's a direct expense or a general expense, as well as it's a variable expense, the portion of that input VAT also goes to the VAT control account. By the end of the month, the difference between your output VAT and your input VAT gives you your VAT due, or the VAT that you can claim from ZRA. Every time you make a payment of this VAT, you're also supposed to post it against this VAT liability so that it reduces your VAT liability in a particular month. So this account is always increasing and reducing, increasing with the VAT liability, reducing with any payments or claims that you've made from ZRA. So when you set up a good accounting system, you're actually able to keep a track of your VAT liability in this way. So this is what I wanted to share in today's video. I really wanted us to look at how do you go about setting up a good system for VAT. For those that don't have an accounting system, you can work with Excel, okay? You can work with Excel. So once you've got your records kept properly and neatly, all you need to do is every month have a tab for your sales and have another tab for your expenses, and select the VATable sales and VATable expenses, and net them off. So it will give you the VAT on your sales will give you your output VAT, your VAT on your expenses will give you your input VAT. The difference between the two will give you your VAT liability. But it's also very important for you to keep an eye on your zero-rated products as well as exempt products. You see, when it comes to zero-rated items, it's not a must that they will forever be zero-rated. That is why, again, I keep emphasizing listening to the minister's annual budget, because in that budget, some items might just be moved from zero rating to a standard rate. For example, recently the newspapers and booklets have moved, even online publications actually have moved from zero rating to standard rating. So this is affecting, businesses that are in publishing as well as in newspaper distribution and production. So it's always important for you to know which items are zero rated, which items are standard, which items are exempt. So this is what I had to share in today's video. In my next video, I want us to look at an actual submission of an online tax return on the ZRA portal. And I'm going to continue with my example of this bakery. How do we submit a VAT return for a bakery? Okay, so keep all your records properly. And as I do this video next week, also just keep track in terms of how I proceed. So thank you so much for watching today's video. If you haven't subscribed already, subscribe to my channel by clicking the subscribe button. It's up here. Click subscribe. Thank you so much for watching and see you next time.